you can't escape it, right? AI is everywhere. It feels like we are on the brink of a revolution that's going to change absolutely everything. But with all this excitement comes just massive, almost unbelievable amounts of money. So the big question is, are we watching a true technological dawn, or are we living inside the next great tech bubble? Let's get into it.
To really get a sense of the scale, just look at this number, $91 billion. That's the amount of venture capital that got poured into AI in the second quarter of 2025 alone. It's a truly staggering figure. It just goes to show how intense this investment frenzy has become. But you gotta ask, is all this cash sustainable?
And that question brings us right to the heart of it. Now, this isn't a warning from some critic on the sidelines. This is coming from Bret Taylor, the chairman of the board at OpenAI, the company at the very epicenter of this whole AI boom. When an insider that high up says we're in a bubble, you really have to listen.
So, okay, let's follow the money. Where exactly is this mountain of cash going? Because the scale of it is almost hard to wrap your head around.
This is a full-blown gold rush, and it's happening across the entire ecosystem. We're not just talking about some clever software here. The tech giants are projected to drop $300 billion on infrastructure. OpenAI is aiming for a valuation that rivals entire countries. And on top of that, we're spending another $40 billion just to build the data centers to house all of this stuff. The spending is happening at every single level.
But here's the catch. For all that money getting thrown around, where are the actual results? Well, a pretty sobering study from MIT found that a staggering 95% of corporate Gen AI projects have failed to produce any meaningful financial returns. That reveals a huge and, potentially dangerous gap between the hype and the on-the-ground reality.
And nothing illustrates this paradox better than the company leading the charge. Even OpenAI is on track to lose $5 billion this year. They're just burning through cash at an incredible rate, which really highlights the monumental cost of just trying to stay in the race.
And who better to confirm this than OpenAI's own CEO, Sam Altman? This just perfectly echoes what his chairman, Bret Taylor, warned us about. The very leaders of this revolution are openly telling us that, yeah, the potential is huge, but the financial risks, they're just as monumental.
So this feeling of revolutionary hype and massive financial risk, does it sound familiar at all? It should, because we've seen this exact pattern play out before, back in the dot-com era.
I mean, the parallels are pretty striking, aren't they? In the late 90s, the mantra was the internet will change everything. Today, it's AI will change everything. Back then, you had countless failed startups, all that dot-com snake oil. Today, we see that in all these projects with no real return on investment. But out of that dot-com crash emerged absolute giants like Amazon and Google. So the huge question now is, who's going to survive the AI shakeout?
And this is Bret Taylor's most crucial point. The hype wasn't totally wrong. The internet did change everything. The bubble wasn't a sign that the technology itself was a failure. It was this messy, chaotic, and ultimately necessary process of sorting out the real, durable value from all the speculation.
So, if a bubble is just a necessary, messy part of the whole process, what's on the other side of it? Well, it looks like the industry's already starting to shift its focus away from pure hype and toward creating real, sustainable value.
Experts basically see this as a three-stage evolution. We've all been living in step one, this phase of intense hype and speculation. We're probably entering step two right now, a market correction, a shakeout, where the weaker ideas and companies are going to fail. The whole goal is to get to step three, a period of sustainable, value-focused growth that's built on stuff that's actually proven to work.
So, what does this value-focused approach actually mean? Well, it means investors and companies aren't just chasing the next cool piece of tech anymore. They are demanding practical uses with a return on investment that you can actually measure. They're prioritizing solid infrastructure and responsible, ethical AI development. The era of funding ideas scribbled on a napkin is pretty much coming to an end. And look, this isn't just wishful thinking. The major industry reports are all telling the exact same story. PwC says the focus is now on ROI. Morgan Stanley is seeing adoption finally drive real, quantifiable returns. The Stanford AI Index is emphasizing measurable impact. And, crucially, PwC also notes that the winners won't just be the ones with the best tech. They'll be the ones with the best, most unique data to power it. And here's the really fascinating part. While the investors are getting more cautious, actual businesses are jumping in faster than ever.
According to the Stanford AI Index, the percentage of organizations using AI shot up from 55% to 78% in just 1 year. So the hype might be cooling down, but the real-world application is seriously heating up.
Which brings us to the final and most crucial question. As the hype starts to fade and the inevitable shakeout begins, who actually comes out on top? What's going to separate the survivors from the failures?
Well, it seems to come down to a few key traits. The winners won't just be dabbling in AI, they're going to weave it into the very core of their strategy. They'll understand that their unique data is their real competitive advantage. They'll build in responsible governance from day one, not as an afterthought, and critically, they'll focus on building teams where humans and AI actually make each other better.
So, here's the ultimate takeaway. The AI bubble? It's real. And yes, a lot of people are going to lose money. But thinking of it as just a crash waiting to happen is kind of missing the point. It's really a powerful force of creative destruction, a necessary, if painful, furnace that's going to burn away all the hype and forge the truly transformative companies of the future, just like the dot-com bubble did a generation ago.
So as we watch all of this unfold, the real question isn't whether AI is the future, it is. The question we should all be asking is this: when the dust finally settles, who will be the ones left standing to actually build that future?